Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. The break above the third of three resistances, that's the neckline of the February to April 2023 head and shoulders continuation pattern, currently 85.35, was the start of the very recent move higher. The neckline had previously helped cap the market in various times, most recently late January and late February. However, 4 weeks ago, the resistance was breached and broken. So where does this very recent move higher originate from? Well, it starts at the base of the congestion between 83.46 to 84.40, containing the September 2012 high at 84.24, the February 2013 high at 83.50. That past the long moving average, currently 83.98, as well as the medium moving average in the past, and that's currently at 8500. However, the journey high has been a tortuous one. Yet in late February, the market built on the congestion below 84.40, plus the short medium moving average, currently 85.72, and finally a golden cross of the medium moving average over the long moving average just over 4 weeks ago, and staged an eventual move up over the neckline. So what now? Well, last week I drew a bright red highlighted late October 2023 to early February 2024 bullish Andrews pitchfork to show the bullish angle of attack of this market. Prices pushed up over the middle tine 2 weeks ago, and that's currently at 88.96. Stalled and approached to the upper tine, which is currently at 93.35. Prompted, I think, by the somewhat surprising resistance of the 38.2% Fibonacci line of the big October 2020 to March 2022 move at 90.97. The market then fell away 2 weeks ago, down to where it found support again at the bright red middle tine, with I suspect some unusual help from the rising short moving average, currently at 88.52, and even perhaps the 50% Fibonacci line for the whole of 2022 at 8900. What is interesting here is there is no fallback position back onto a bullish shift pitchfork here. This is it. What you see is what you get. Secondly, and I said this last week, keep an eye topside on the 38.2% Fibonacci line of the October 2020 to March 2022 move at 90.97. This one capped the market and is worth watching, as is the 50% Fibonacci line of the 2022 move at 8900, and the extension once again of the June to August 2023 ascending triangle, and that's currently at 87.57. End of quote. Today's gapping opening higher is still being maintained, and I'm now wondering if the action over the last 3 weeks may have left us with a question. Is this action a bullish halfway hesitation, or is it a potential double top? LME 3-month aluminium. I keep repeating myself here. There was and is a lot going on here, and I sometimes think my trying to explain it may have even made it more complicated. Let's start with the shallow reverse head and shoulders continuation pattern neckline, the June to July 2023 move at 22.50, highlighted in bright green on my daily chart. The recovery in late January managed to push over this neckline, but the move failed on approach to the next neckline, the dark green highlighted neckline. So you've got bright green, now a dark green neckline of the October 2022 to May 2023 head and shoulders top pattern. That's currently at 23.07. And then it failed and judderingly started to move lower. This was how I clarified what I saw 7 weeks ago, and I quote, "Over this last week," so that is 8 weeks ago, Another pattern has emerged, has started to develop in my mind, and I've drawn it unhighlighted on my daily chart. It's a late October 2023 to date possible potential diamond pattern. It's not a pretty pattern, but I would pay close attention to the converging trend lines for this pattern. I'm not in love with this pattern and I will retire it if it does not perform, but it does have merit and it is one to watch, end of quote. 5 weeks ago, I chose to highlight this pattern in dark blue on my daily chart. It is still not the best looking diamond pattern, but as I said earlier, it did and still does have merit, especially on the recent break higher. Thus, 2 weeks ago, I laid out some potential topside for such a pattern. We would have a primary target X in the 2412 area and a secondary hard to reach target X1 in the 2491 area, which is almost off the top of my daily chart, but it's there. A key factor in prompting me to lay out this potential has been the break higher late 4 weeks ago and early 3 weeks ago, out of the small February to early March bear channel. A bear channel I pointed out 5 weeks ago. This bear channel also has its own potentials topside of a primary target X2 up at the 2336 area. Last Thursday, prices punched up and reached target X2 at 2336, and we've gone further up today. Looking ahead, well, the immediate resistance and target has been overcome. We next have above the unhighlighted February 2023 to date downtrend, currently at 2374, which has been pierced, which I'm also not quite confident in. And then we have the December 2023 high at 2400, and just above those is target X. Now, two final things. The first might end up becoming a big thing in the future. We had a bow tie formation late 2 weeks ago with a rising short moving average currently at 2284, the slowly rising short medium moving average currently 2240, and a barely rising medium moving average currently 2237. For any who follow bow tie formations, you can easily see that these moving averages are in the wrong order. However, that being said, the theory indicates that the market will move in the general direction of the outgoing moving averages from the bow tie, which, to be honest, originally looked sideways, but now is becoming clearer as a move higher. Additionally, between 15 to 20 sessions after the crossover, we may see a significant move from this bow tie. In this case, and allowing for some holidays in between, the market may make a move between the 9th and the 16th of April. Now, I will not await with bated breath, as I am not happy about this bow tie formation at all. Finally, we had a golden cross last week of the short medium moving average up over the medium moving average. This may be a lagging indicator, but it is still there as an indicator, just after a bow tie formation, and it adds some comfort to the overall idea. LME 3-month lead. In mid-November 2023, the market reached its recent zenith, turning around and leaving behind a V-top with a substantial extension from early December last year until late January this year. This extension ended up being a bull channel. In late January this year, prices dropped out of this bull channel all the way down to the congestion around 2000 in mid-February. This support was not spectacular congestion, but enough to hold prices in a pipe bottom 7 weeks ago. After this, the market rose up into a very steep ascending wedge pattern highlighted in bright red on my daily chart, before breaking lower at the end of February, again only to be held at the same support seen back at the start of this year, the January 2020 high at 2039, and leading to a fresh rally 5 weeks ago. This rally saw the market break higher over the 50% Fibonacci line of the March 2020 to March 22 move at 2135 and the 50% Fibonacci line of the May to November 2023 move at 2142, and even the November 2023 to February 2024 move at 2151. However, as I said 3 weeks ago, and I quote, I suspect the key overhead resistance will be the same as in late January, the congestion between 2182 to 2189. End of quote. And so it proved to be, as we peaked 3 weeks ago in the middle of the week with a high that was importantly lower than the one in late January. Prices then dropped down below all the moving averages, below the January 2020 high at 2039, and almost down to the February low at 1994, enough to say that prices effectively reached there. I have connected the lows since October last year, extrapolated it back into mid-July, and highlighted in dark blue on my daily chart. It's currently at 19.90. This is not part of any special shallow bear channel, but it is enough that I am paying special attention to it, including last Thursday's very dramatic key reversal up, based right on it. However, despite last Thursday's key reversal up, a question I put forward last week still rings in my ears, and I quote, "All this action is making the big picture very clouded. All I have now is a consideration that perhaps, just perhaps, the action since November last year is a really big cat's ears pattern. It is too early to know yet, but I would like to lodge that thought in your mind, just in case." End of quote. We are currently close enough to the dark blue trend line for me to still consider that.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.